Hello, I'm Jonathan Cocker with the law firm of Borden Ladner Gervais. We're here for another episode of the BLG Energy Transition Series. Today we have a fabulous guest, Thomas Mueller, who is the president of the Canada Green Building Council. Thomas, welcome.
Nice to see you, Jonathan.
Nice seeing you, and thanks very much for your participation today. So Thomas, we want to start maybe at the outset and ask you a bit about what the council does, what its objects are, and what kind of things it's currently working on.
Well, the council is a national nonprofit organization. We're getting on to 20 years now, but we're a little bit different from other what you would call environmental groups in that we are industry-led. So our board, our membership is by a large part made up by the industry. So that includes commercial real estate owners, manufacturers, designers, suppliers, large contractors. About 1,100 corporate members and about over 3,000 individual members across Canada. And our focus is really finding market-based solutions for the building industry and for the building sector and transforming their practices towards sustainability. And of course, on top of that list for us is climate change. And we do that in various ways. We're setting advanced standards for the industry, like leadership in energy environmental design. We have a zero carbon standard that allows buildings to perform at a zero carbon level over their lifetime. And we also do it through research. We have advocate with senior levels of government. And we have a fairly extensive training program as well for the industry. So it's a very comprehensive offering that we have to transform the industry in Canada from coast to coast to coast. So we are everywhere.
Great. And when you talk about that transformation, can you tell us a bit about what that looks like today in terms of the performance of buildings, again, sort of commercial buildings, perhaps, in downtown areas? What's the typical profile of those buildings, and where do you see the sort of near-term transition opportunities?
So it's really the transformation in the building sector. And the building sector is the largest industry in the world, and one of the largest industry in Canada, if not the largest one. And it really varies in terms of transformation on kind of the subsectors. So where we as the council have made a lot of progress is with commercial real estate owners, particularly those real estate owners that are funded by institutional investors like pension funds, but increasingly also REITs as well, so that there's a growing interest from investors to move forward. And if you go in any downtown core today, if it's Calgary or Vancouver or Toronto, all the office buildings downtown are all certified to our standard, to the LEED standard, either as a gold at a platinum level. So the commercial real estate sector has really bought into, at a significant scale, into greening their buildings, making them more sustainable, increasing the performance of the buildings in a number of areas, and it includes energy and carbon and human health and many areas. And it's really, they're doing it not only for ESG reasons, but also it's good for business. So there's a really significant buy-in that continues to grow year over year. On the institutional side, we have, the large cities and the medium-sized cities in Canada, universities. So kind of the institutional sector also has bought into green building as being a solution for a variety of environmental issues, including climate change. So we have a pretty broad uptick there as well. Like if it's the City of Toronto or University of British Columbia and McGill, City of Montreal is actually a big adopter of our programs. Again, very wide adoption. Where we haven't made as much progress is on the residential development sector, and the reason for that is it's very most of the housing in Canada is market housing. And so developers are more driven not by long-term investments, but by shorter, profit-driven objectives. It makes it a little bit harder for them to adopt these principles. But having said that, the many large developers like Westbank, Tridel, Minto, that have adopted our standards, and we've been working with these companies for many years. So it really varies by sector. It varies by region in Canada. But in the big markets like Montreal, Toronto, Vancouver, we have a very strong presence and a very wide adoption of our programs and our standards.
Great. And you mentioned ESG. I mean, is that a focus for those large publicly traded institutions? Is that a focus that ends up translating into requirements both for new builds and for retrofits across Canada?
Well, ESG has is growing quite rapidly across Canada now, in all kinds of organizations. It's just it's being accepted, I should say. It's being accepted as a framework that needs to be in place for an organization to look at all aspects of the operation, not just the E, obviously, is for environment. And this is the area where we're spending most of our time. The council spends most of its time, where its focus is. It's the advantage of ESG is that it actually provides a framework for any company to say, where are we doing really well? Where are we doing okay? Where do we have to make improvements? So it really gives you a framework and a path to continuous improvement in those areas that need attention. Like right now, for example, like social, diversity, equity, and inclusion is a big deal now because there's just not enough women in around boardroom tables or in leadership positions across the country. We're making progress, but we're not there yet. The same as on the ESG side is around climate. It's around climate. Climate has moved from a kind of something that was around and that we should eventually pay attention to, kind of become a focal point in regards to the climate risk, particularly in real estate, has increased quite significantly because real estate is a long-term investment and the climate risk has just increased. And so the conversation has really moved at the center of the business and saying, do we really understand what our risks are like climate and how can we address them? Because we, particularly for commercial real estate, we own buildings from across the country. We own potentially buildings across North America, across the world. And do we understand what the risks are of these assets and how they're going to be affected by climate change? And how you can continue to deliver revenue and profits as we saw it when we built them and when we acquired them. So it has really moved to the center point. So this whole discussion around climate risk, carbon mitigation, increasing the resiliency of your assets, and really looking at your assets from a portfolio-wide perspective and saying, how can I get my portfolio to low carbon performance over the next 10 years leading up to 2030 and to zero carbon by 2050. This is really what's on the table right now. And that's not an easy challenge to transition an entire portfolio of buildings to low or zero carbon performance. That's the challenge that all building owners now that own a sizable portfolio of buildings, either commercial real estate, governments are some of the biggest building owners in the country. That's what they're faced with. And that how are we going to get there? By balancing with other environmental needs being, water conservation, waste, human health, biodiversity, all those kinds of issues on the table. And they're embedded in kind of ESG. We're starting to really look at those in an organized way. And granted, there's still a debate and say we need consistent frameworks around ESG, but that is really, really an important framework then you can actually start on reporting and progressing on your environmental and other strategies.
And Thomas, let me ask you, in terms of that transition to a low and ultimately zero carbon footprint, what's the current state around sources of fuel for large commercial buildings, and where do they begin in that transition in your mind?
Well, most commercial buildings are still, and most larger buildings anyway. Actually, most of our buildings across the country and homes, it's really linked to natural gas. And natural gas, where it's better fuel than oil and coal, it's still a fossil fuel. And it's become very clear that when we have a carbon discussion that we need to transition out of fossil fuels. Not entirely, but to a large degree. The challenge we have in Canada is that we have very extreme climate. I mean, I'm in Vancouver, maybe it's not as extreme here, but generally it's more extreme, right? So what I mean by that is that we have very cold, dry winters, and we have very hot and humid summers. And in terms of buildings, you need to both have a what we call a cooling load and a heating load, right? Other countries that are more temperate, you don't have that challenge. In the southern United States, you only have huge cooling loads, but no heating loads. So we have a huge challenge, and it also goes into how you design your building. So it's really hard to, if you're in Winnipeg in the winter, not to there might be some days, even if a very well designed building that's well insulated or high insulation rates, high performance from an envelope, like building enclosure kind of perspective, it's reasonable to think that there will be some days where we're going to need to use fossil fuels because it's minus 40 out there and the wind, and wind chill. What you have to look at it is you have to look at it more over the course of a year, and how can these buildings operate at a kind of zero carbon over the course of the year, which means is, when we talk about zero carbon, it is that you have to have buildings that are designed or retrofitted to high levels. So the building enclosure needs to be very effective. Then you have to have equipment that's very effective and very efficient in whatever fuel you're using, if it's clean electricity or if it's a fossil fuel. And then the third one is you need to look at your fuel source. Like, what fuel are you actually using? The general trend in the industry, Jonathan, is to move towards electrification, meaning that in Canada, we have, at least in 3 provinces, being British Columbia, Manitoba, and Quebec, and maybe Newfoundland with the dam they're building there, we have a very clean hydroelectricity. Generally, it's about 95% carbon free. And then there's a tacit agreement that we need to take advantage of the clean energy source to power transportation like cars, and we need to also power buildings. The challenge is that even with the dams that we have, and in BC you have the Site C dam, you just don't have enough clean electricity. If with Site C dam, you wouldn't have enough electricity in BC to electrify both buildings and transportation. So you need to make your buildings so much more efficient moving forward. And then you also need to look, in addition to this clean electricity that you have, you need to look at other fuel sources like on-site renewable energy sources. Hydrogen is in play. There is, biofuels in play. There's all kinds of biogas in play. There's all kinds of different alternative fuel sources in play that you need to look at. It would be a mistake to think, oh, we're building the Site C dam and now we can electrify everything. That's not going to happen. Somebody told me, a professor who studies these things, he said, in order to electrify buildings and transportation, British Columbia, you would have to need 5 more Site C dams at the current consumption level.
Right.
Which obviously is not possible. So we still have to reduce our use of energy. So our buildings and our transportation has to become a lot more efficient.
Right.
Like degrees of efficiency, yeah.
Yeah, and when you say, you mentioned hydrogen, you mentioned biofuels. I mean, I gather at first instance we'd be talking about blends. Mm-hmm. So a lower carbon fuel based on a blend, and then with maybe an expectation eventually that there'd be a transition more in whole to a lower carbon fuel as technology and infrastructure permits.
Exactly.
Right, and then if we look at those buildings that obviously aren't easily retrofitted. So I mean, we've got existing infrastructure. Some of it is prime real estate, no doubt, well constructed, but not necessarily designed for some of the transitions that we're talking about, whether it's energy efficiency and or alternatives around its carbon footprint. In respect to those buildings, what's the solution for those owners who want to otherwise participate in these programs, whether they're a regulated program or a voluntary program? How do they get their building to notionally be consistent with their competitors who otherwise maybe have an easier time at putting these systems in place?
Well, I think the reality is building owners, they all have great buildings, and they have buildings that perform well, and then they have buildings that don't perform very well, right? Depending what the portfolio is. It can be anything from office buildings to malls to industrial parks to purpose-built rental, that there's a whole range and depends on the age and so on. The fact is that I just want to make clear for everyone, when we talk about buildings, we're not talking about homes. That's a whole different, like home,
Commercial.
that's a whole different thing, right? So basically, and it goes back what I said earlier, is that owners need to look at their portfolio, and they actually need to understand, and it might be a surprise to many people, is that most owners don't even understand how their buildings in their portfolio actually perform. Like they're not benchmarked. There's no monitoring. There's no disclosure. And some buildings don't even have separate meters. Like it's the data. Like data is hugely important in buildings, and we have data, but we certainly don't have enough data. We don't have real-time data to really help the building sector make good decisions about understanding how the buildings perform. The challenge, as I said earlier, entire portfolio of buildings need to be transformed, which means two things. The new buildings need to be built to zero carbon. It means zero carbon. The buildings will not, over the course of a year, generate carbon when they're operated. Now they also need to look at the embodied carbon of those new buildings, like the cement, the steel, whatever materials, the structural material used. What's the embodied carbon of these materials? Because it's about the time frame. It's 2021. We have 9 years for 2030. The biggest impact in a building initially is the materials you use. And then over time, it's the operational carbon that being generated or not generated, right? So the decisions right now is, because we have such a short time frame and buildings make up such a big part of our domestic and global carbon footprint, the embodied carbon, what we call embodied carbon, is that the carbon is being generated by producing and installing building materials, particularly like the big items, that needs to come down immediately because you can get there. Then you need to have a building that's zero carbon and that performs at zero carbon. That kind of creates what we would call the building stock of the future, that they have a building stock that actually doesn't generate no carbon or very little carbon while it's being operated. The second part is also because of the time frame, we just don't have enough runway, is the retrofit of existing buildings. And existing buildings need to be retrofitted over time to achieve our carbon targets, because the retrofit you could make immediate reduction, because new buildings, as I just said, will continue to contribute carbon when you build them. The existing buildings need to be retrofitted to actually achieve our carbon targets, and they need to be retrofitted at scale. Now, we estimated that about a quarter of the large buildings in Canada, we have about 250,000 buildings in Canada, give or take. A quarter of those buildings have to be retrofitted over the next 10 years to produce between 20 and 40% less carbon, not energy, 20 and 40% less carbon. That's the challenge. And that's the challenge that building owners look at. And what they have to do, the building owners actually have to look at and say, how can I, because these buildings are on an investment cycle. They have tenants, they have an investment. So they have to look at how can we invest in those buildings over time in terms of equipment, in terms of any improvements to the envelope, in terms of fuel sources and so on, to get them to a lower carbon performance than what they are right now. But scale really matters here. It's not every building can be zero carbon, but like a 20 to 40% reduction in carbon at scale, that will make the difference. So we have to think both exceptional performance and we have to think scale to achieve our climate change targets within the building sector.
Right. And how does the regulation drive these transitions? I mean, is it through building permits? Is it through ultimately a form of carbon tax? How is a regulatory driver relevant in terms of this transition?
So that's a good question. It is a combination. I think it would be a mistake for us to think that we can regulate our way out of it, because the regulations, the way that the building code works, it's a national building code. That's updated every 4 or 5 years. Then once it's been updated, then with participation from the provinces, then it goes to the provinces and they still have to adopt it. and then it has to come into force, and then people actually have to use it. So that can be between a new building code being developed, updated till it's actually in use, and you see change on the ground can be 10 years. So it just, again, in the time frame, it's a vehicle, but it's not the solution. It just cannot move fast enough to bring about the change. And it cannot be, because everyone is participating, it cannot be, can I use the word radical enough to have this change that every building then all of a sudden we built to that, because the industry just would push back. The best code that we probably have right now is the PC step code that gives the industry a view how the code will be stepped up every so often to get to very low or very efficient performance. I don't know, I forget what the end date is, but somewhere around, I think it's 2032, perhaps. So the industry has a line of sight on how the code is going to evolve and where it's going to be. That's probably the best example of a code. So regulation plays a role to raise the whole ship over time. But the more important part is that then there's carbon pricing, which has some impact. Particularly, $50 doesn't make much difference. To be quite honest, at the building scale, it doesn't make much difference. A building owner would kind of roll that over to their tenants. People wouldn't know that much. If it goes down to 170 by 2030, that would make more of a difference, particularly if you're an owner of a portfolio of buildings. And I always use the example of UBC, University of British Columbia, that when the carbon tax came in British Columbia and it's only at $30 a ton, they paid $2 million a year in carbon taxes. And that's something that's not money that they wanted to spend, so they made to make improvements to bring that down. And I would say that principle would apply to other owners as well. But the carbon tax would have been 170 would make a difference. The real cost and the I guess the benchmark or the yardstick is changing on that is in the $230 a ton, where it actually would be the real price of carbon. But I also heard closer to $300 a ton. So again, it depends. So then it would make a real difference for people making decisions quite differently. So that's the second part. And the third part is where we were really involved is that we support a price on carbon, because it leaves it up to the industry to decide how they want to get there. It's probably the best business mechanism to decide on carbon emissions. But where we're coming in is actually this government can only do so much. It's really up to the business sector. And that's why I like the ESG framework. I like this change in investment climate and sustainable finance and sustainable investing. I like some of the things that Mark Carney is doing around disclosure and actually creating frameworks to assess financial risk and then change the investment patterns. That is actually, I think, that could just take us to the finish line. It's actually businesses can take us to the finish line because they're starting to understand the risk and they can understand the benefits from acting on carbon emission reduction. And because there's a huge, when you look globally, there's like trillions of dollars of investment is going to be made in climate change. There's a huge business opportunity here. From not just the building sector, the business generally, but there's also a huge opportunity we had in the real estate sector in terms of the reason why they're doing right now, we're doing LEED and other things voluntarily, is because it's good for business. It attracts tenants, it attracts residents. Sometimes won't even rent a building anymore if it's not at least LEED Gold or Platinum certified. So it's driving the business. And as we figure that out, I think there's a significant opportunity. So it's really business, because if business can figure this out, this can move actually really fast and very consistently because it's based on good business principles. So climate is not a nice to have, a add-on. I think it's really moving into the center of business decision-making, which we kind of witnessing now. And it will have, I would think it will have a profound impact in Canada and other places in the world.
Wow. And maybe this is a step too far, Thomas, but are we going to see a kind of a cap and trade system within buildings? In other words, those who are above the standard in performance, can they essentially monetize some of that additional performance, that excessive performance, and sell it to those who are underperforming, who otherwise may have financial impediments to do the kind of retrofits we've been talking about. Is that on the agenda?
Possible. It's possible.
Right.
The city of New York is doing that, right? The city of New York, they have put in pretty stringent regulations. And so developers there and owners, if they don't reach certain carbon targets and thresholds, they're paying millions of dollars in fines. But it could be a overall trading system across the country in terms of, if it's not bound by a jurisdiction, if you could trade carbon across the country, even potentially within North America, that's possible. But then you go back to measurement and verification, right? You have to then do carbon accounting. You have to measure actually how your buildings perform. It might change how your building perform year over year. That's why when you think about that, then our standards, like a zero carbon standard, becomes really important, because we actually verify that. We can verify that every year. Is the building still performing at that level? How much carbon has the building eliminated over a conventional building? Because there's this whole concept of additionality. So it is possible that buildings could trade carbon, and we would also see that owners would offset that carbon.
I wonder if we could, and this is just fascinating. I wonder if we could just conclude our interview session today with just any final thoughts you have on where you see commercial real estate going in the next, let's say, 9 years up to 2030. I mean, what else is coming that the rest of us can't see that you're starting to see percolate out there in the industry?
I think when you look at commercial real estate, either driven by regulation or by investors, but institutional money, pension funds are very much they're very much up on this issue in terms of how does climate change affect our long-term investment in real estate. So I think you're going to continue to see. I do see that commercial real estate could really lead this, actually, because particularly institutional money, I would say also REITs, we're seeing more, like I said, I see more and more REITs coming in as well, going down that road because of the returns and climate risk. So I can really see that. I think what you will see, what we're seeing right now is that commercial real estate owners are building their first zero carbon buildings. So Oxford Properties is one here that they just finished a new office building, a first of its kind, a large office building in downtown Vancouver, the Stack, that's targeting zero carbon performance. Accordingly, we're going to certify to LEED Platinum and to our zero carbon standard. KingSett, which is also large in Toronto, the Scotia Bank Tower in Toronto, was an existing building they actually took to zero carbon. We know that Manulife is also working, and it's pretty close to finishing an existing building to zero carbon. So the commercial real estate companies are starting to look at zero carbon, say, using the property, looking at it, trying to understand how this works. At the same time, they're starting to look at their portfolio of buildings. This is actually what's happening. And how can they get there over time without, you don't want to have an existing buildings with a perfectly good boiler and HVAC system that you just put in 5 years ago. You don't want to throw that out, right? And that we don't want that to be thrown out. That would be a waste of embodied carbon to be thrown out. So I think they're looking at what the real estate companies are, they're trying to understand what is that risk and how will it affect our real estate in different locations, depending what the business is. I think you will see that. I think you will see that there will be, after initial analysis and maybe a little bit of resistance, will be resistance that they will realize that they can actually do this. We had the same with LEED 10 years ago. We didn't do it and it was too costly. And then they looked at it and they started to do it, and then it went like wildfire. Then all of a sudden, everybody started doing it. I see the same with zero carbon. The one thing that needs to be figured out is how are we dealing with the embodied carbon? I think everybody is going to struggle with that for some time because it's needed, but it's such a big sector. And how do you change cement mixes to be low or zero carbon while maintaining the structural benefits and the durability of cement. You can't build all the buildings with wood because you might have the supply, but then you affect biodiversity and ecology and forests and so on. So I think that's where kind of there's a lot of rub there in terms of friction there, and how are we going to figure that out on embodied carbon? That's going to be a really difficult area, and there's going to be a lot of pressure, but it's going to only move at a certain pace because there's so much. You need to change entire supply chains on materials and products.
Yeah.
So, but I think the third part of it is, so we're very strong on carbon. I think there's going to be a real push in carbon, no matter which government is going to be in place. It's inevitable, and it's too bad that it actually is somewhat of a partisan issue still in Canada and North America. It shouldn't be a partisan issue, but it's going to happen because the external environment and climate change is moving on regardless of what people say. It's happening, and we see the impact on infrastructure. We see impact on public health, so forest fires and those it's already happening, right? So, and that brings me to the third point, is this whole aspect about human health. That's going to be really people affected by climate change, as a be it forest fire, poor air quality, by flooding, by insurance companies being affected by insurance losses. But this whole thing about human health is going to really be very strong, move to the forefront. And whatever we do to the buildings needs to be well balanced with human health. Like, we don't forget, we're building buildings for people. People need to feel well. They need to be protected. They need to feel healthy in those buildings. And we spend a lot of time indoors. 90% of our time in Canada we spend indoors. So the indoor quality of the building, the air quality, what materials is really important. So we need to balance that. You cannot have super insulated building. It needs to be properly ventilated. And I think it's getting a heightened awareness because of COVID, of course. And then the last part is that we need to pay attention to everything else, because we cannot have a healthy economy out without a healthy environment. I think we come to understand that now. And so we need to look at all the environmental factors, waste, water quality, we have enough water, but water quality in Canada is an issue. And just in terms of how we organize our cities and our developments, right? So we put entire developments on low carbon systems. If it's Jericho lands, Toronto waterfront, any kind of redevelopment areas, I think that's where you're going to see happen, because doing it building by building, it can be done, and it can be done cost effectively, but it's just not as efficient as doing entire developments. We have to really rethink that, how we developments are going to be around in 100, 150, 200 years. You have to do it now to have the benefits in the future. So that's going to be a very that's going to be something that, in terms of just development and large scale development, is something that's going to get a lot of attention. It's not going to be the business as usual anymore. So there's a lot of moving pieces there, and they're all driven by carbon and I would say by human health, right, that need our attention.
Oof. Wow, that's fabulous, Thomas. Thank you very much for your insights.
You're welcome. My pleasure.
This is the end of our energy transition interview with Thomas Mueller, President of Canada Green Building Council. Thank you again.